your digitally created asset and put it into a secure way, a secure platform, a secure form where nobody else can do anything with it.
Yeah, absolutely. I mean, you're right. Security is going to be so critical. I mean, at the moment, the emphasis, as we've already said, is on limiting human intervention. But once things are on a platform, of course, they do need to be secure. Otherwise, we're going to be at risk of the world's greatest hack at some point in the future. I think that sets us up. Thank you, Jeff. That sets us up very nicely for Danny Cotti, who is going to, of course, who is one of the people responsible for maybe the most successful network currently in trade, Marco Polo. I'm going to talk about particularly one of the modules on there. But so give us an idea, Danny, of the network and how things fit within that. Pass on over to you. Danny, you'll need to come off.
Okay, thanks, Sean. Good afternoon, good evening, good morning, everybody. Today's trade transactions involve numerous players, documents and data elements that are involved based on document exchange via multiple isolated systems. We know all the instruments from LCs to commercial invoice, purchase orders, bills of exchange, etc., that are flowing through the trade solar system by couriers and PDFs in today's world, and are recorded in standalone legacy system and records that don't talk to each other. Many parties are involved, and as shown on this slide. So what can you do about it? Well, if you go to the next slide, we are all very familiar with letters of credit here on the left-hand side and open account transactions, where the letter of credit provides mitigation of risk, can be used also as a funding instrument. The bank provides the risk mitigation based on the processing and matching of paper documents. So it's a conditional payment. But it's slow, it's complex, and it's costly. On the other hand, you have open account, which is faster, simpler, low cost, but it doesn't provide a risk mitigation. It doesn't provide a payment assurance. The trade is based on the trust between the buyer and the supplier. Now, a digital solution that we promote on the Marco Polo network is payment commitment, which ticks all the boxes. It's fast, simple, low cost, mitigates risks, can be used as a funding instrument where a bank provides the risk mitigation based on exchange and matching of digital trade data to establish a conditional payment undertaking. Contractual engagements, as Jeff said before, are obviously what will drive the members and the Marco Polo network, and the same as rules as per the Marco Polo network specific rule book that we are in the process of developing to really cover the irrevocable payment obligations. If you go to the next slide, where we see a process flow of payment commitment, it can be a traditional four-corner model, or what I'm showing here, a three-corner model. So either you have a bank of the buyer and the bank of the supplier, or in a digital space, you probably can deal only with one bank, and one bank can cover both buyer and supplier scenarios. So all parties need to be on the Marco Polo network in order to execute the transaction. The flow is very simple. The buyer uploads the PO and shipping information to the platform. It gets immediately replicated on the Corda nodes of network, and everybody else who is permissioned to see can see that transaction and the data. So the seller then approves the purchase order, and therefore the buyer bank can issue a conditional irrevocable payment commitment, similar to a letter of credit. Once the shipment is done, the goods are prepared, the seller uploads the invoice to the Marco Polo platform. Then a matching takes place on the Marco Polo platform between the purchase order and the invoice, or shipping data that are being provided by a third-party provider. And as a result of that positive digital matching, the effective irrevocable payment commitment can then be issued by either the buyer's bank or by the bank that is in the three-corner model in the middle that serves both clients. The effective IPC, irrevocable payment commitment as we call it, is an irrevocable payment undertaking from the buyer's bank to make payment to the seller or the seller's banks when there is a four-corner model based on the automated data matching on the Marco Polo platform and based on the rules of the Marco Polo rulebook. So if we go to the next page, then we'll see that this type of payment instrument has received a lot of interest in the marketplace. All the banks that are shown on here, or the corporates, or the partners have seen that this is a way where we can elegantly deal with the challenges that we have described and that Jeff has referred to earlier. So a quick introduction of us. We are founded in 2017. Marco Polo was founded then by a group of leading financial institutions, and TradeFinex and are free. We are now one of the largest and fastest growing distributed trade and working capital finance network in the world, a digital platform that allows the exchange of assets digitally in a secure way and in a direct way. So open and distributed network, leveraging cloud technologies, API technologies, and DLT technologies to facilitate trade and working capital finance solution that create a better customer experience, that are seamless data integration, while at the same time, they're reducing cost, time, and risk. And if you go to the next slide, then we see in summary the value proposition of the Marco Polo network and the payment commitment. So first of all, one network for multiple trade finance solutions. So it's truly multi-product and a multi-bank scenario. You connect once to connect to many. Our apps are also embedded into ERPs, which will provide automatic reconciliation at the client's end, which is one of the key differentiators that we have with the Marco Polo network. It works with your existing solutions. No need to change or integrate to various other external systems or build something or buy something. It's just an add-on, and it connects. It connects modular applications, and it can be customized. In fact, it can be customized to a level that nobody has actually the experience with. In today's world, legacy systems are really rigid in terms of functionalities and in terms of program settings. In the Marco Polo network, a buyer or a seller or a bank can set up a program and set up the rules how to settle that program on a program basis. And then it gives access to distributed ledger technology. And that's an important aspect because it allows permissioned and secure access of data. The biggest problem that CFOs and treasurers have in today's world is data security and cybercrime. And the fact that the data can reside inside the firewall of the client's offices on the node and is only shared on a transaction basis with the parties that are involved in the transaction makes it super secure thanks to the Corda network of nodes, a real enterprise-grade DLT protocol. We are leveraging the PC module technology and functionality to also build other solutions. So for instance, we have a solution that we call Supplier Pay, which is an SME supplier-focused trade module offering data exchange and matching solutions, reconciliation, and payment services. And of course, gives the SMEs also access to various types of financing options. Supplier Pay integrates, is leveraging the virtual distributed Marco Polo network with the technology that we built for scale. We will announce this solution formally in Q3, and it will be a further step in providing fully digitized machine-to-machine trade finance capabilities for the industry. Sean, that was my summary.
Thank you, Danny. And I know from personal experience just how powerful Marco Polo Network is and how potent it is. Just to get back a little bit to the subject of today's webinar, which is digital payment obligations. Here, of course, your crypto asset, if I can put it that way, is payment commitment. So this is something that exists. I think you've mentioned it. It comes into being because of the rule book. Now, I said that might be a little bit of an abstract idea, because as Jeff has said, there's no point having, it's a bit like having a motor car without a motorway or without petrol. You can't do anything with it. You need the network that you provide. So however you create it, whether you use the instruments that Andre is going to talk about, which are independent and have an existence independently of the network, or they arise on the network, their success is very much dependent on that network. And given that trade is cross-border, what I wanted to ask you is, for this to work, and I mean, you've already shown us very convincingly the number of participants, the banks, and the interest that you have in the network. How to really revolutionize global trade or digitize it? How broadly based does the network need to be? Are you just talking about numbers of participants? Do you need to secure strategic countries? What else needs to happen to make it really work?
Yes, so in general, the more corporates and banks are using the network, you know, and the more volumes are pushed through the network, they define the success, right? But you need three ingredients to make this work, right? You need the tech, you need the products, and you need the users. In terms of the tech, to serve participants 24/7, 365 days a year, we are very much focusing on scalability and performance of our network. Performance is a journey, not a destination. It requires consistent investment. And we are building on Corda. Corda has been proven already in the wider financial services industry by the DTCC and Accenture to be able to handle the US equity market volumes, for instance. So in excess of hundreds of millions of transactions a day. So we do not have concerns about the viability of the Corda network. Then we have been working with Microsoft and Microsoft Azure to build a state-of-the-art in-house network management system that is hosted in the cloud, in the Azure cloud. There's nothing in the market like this today. Large-scale platform and node provisioning, tuning, I can bore you with lots of tech speak here, but it really works. And we are constantly updating and automating the hundreds of nodes that we will be managing. So we will be able to manage hundreds of new nodes in a day through these network management systems. And it has the resilience that the network can never go down entirely. Individual nodes can go down. We operate a 99.5% uptime in our service level agreements. So that's one of the benefits of a distributed system. They have no single point of failure, and as such are inherently super resilient. Centralized platforms, such as the ones that are currently used in the trade finance arena today are a single point of failure. If the hub goes down, all the spokes die, and all the parties can't participate. So that's the tech. Now let me talk to the product. Now, well, you need relevant products with state-of-the-art user interfaces and rich functionalities. And we are building that. We are building that and have shown with multiple pilots that have been done around the world with our payment commitment module. And we are doing it on receivable finance, and we are doing it on supplier pay. And then ultimately you need users. You know, you can build the nicest thing in the world and you have nobody using it, there is no point. So the engagement around the world is crucial for our success. We are very proud to have engagements with banks and corporates in all continents, and will believe that the Marco Polo network will become successful. In addition, we have built incredible partnerships that bring also users to the platform. Partnerships such as with Accenture, Polestar, MasterCard, and Microsoft. So these are a long-winded answer to your question, but these are the success criteria we see, and we work on all of them with utmost focus, and we have made incredible progress and are very confident that this will be a success.
So, I mean, the question I was going to ask you is, what are the challenges? But I see one of the questions that has come in here is very specific, and I think it maybe goes a little bit to what we were talking about earlier with Jeff, and what the URDTT is trying to achieve. And the question is regarding payment commitment. When does seller ship paper documents to the buyer? And I think you'll have something to say about that. But the reason that this question is being asked is that this questioner, Bruno Figlioli, is from Brazil, and of course what he's saying here is that for customs clearance you do need to have paper documents. So how does a system like Marco Polo deal with that?
Well, that's a very good question. In this transformation to the digital age, we continue to work with physical documents that are requirements in certain countries. And I'm very well aware of the requirements in Brazil where you need the physical documents. The Marco Polo network is not dealing with the physical documents. It is dealing with the data elements of those documents. The documents can be handled either through existing electronic document provider, you know, I'm thinking of Bolero or SDocs, or they can be continued to be shipped with courier services until we have found a solution to automate that aspect. Trade, especially global trade, is so complex and so diverse, you can't digitize everything in one go. So you have to do it step by step. And we see very much the Marco Polo network evolving in a way that it will have regional governance, and it will have regional product development. It's an open network that we are building. So regional and local companies can come on our network and develop solutions to solve specific regional problems. So it is a journey as we go through that, but it is something that you have to start somewhere. We are starting it with payment commitment. We are starting it with receivable finance and with supplier pay, without documents. Mm-hmm. And another point I would like to make is that this payment commitment module can be used for the traditional trade transaction where you have a 3-4 corner scenario, but it can be used also for other scenarios. It can be used just for document matching. It can be used for document matching with bills of exchange. We are working on various use cases for the shipping industry, where we are supporting the shipping industry with like bunker fuel scenarios, canal transit scenarios, or port call scenarios, where a payment obligation from a third party, usually a bank, is making the transaction much smoother. And Marco Polo helps to digitize those very manual processes at the moment. So we are on a journey of digitizing trade. We have, with the Marco Polo network, we have an incredible tool and opportunity to master this challenge and to, over time, onboard various use cases in all geographies, in all industries around the world.
Okay, so thank you, Dan. So it's a very flexible, multi-use platform at the moment, and I think you made a very important point that it can exist alongside paper. But as Jeff has mentioned, the ideal is that we would replace all paper and everything would exist digitally. I think what you said might answer another one of the questions that's been asked here by David Gustin, and this really goes to the whole commercial rationale of and your place in the in the commercial landscape. If I can use a source to pay network already connected to my suppliers, has procurement, AP automation, and early pay, why do I want to use Marco Polo? Give me 30 seconds sales elevator pitch.
Well, Marco Polo is a one-stop shop, whereas the current solution is really a tailored solution for those scenarios. In fact, I think the message we have for all B2B networks is they can connect to the Marco Polo network. They can leave the buyer-seller interaction on that network, and they can leverage the Marco Polo network to access funding and financing cheaper and faster. That's what we are hearing from our corporate customers. So for instance, many customers tell us that as per their analysis they have done internally, that the payment commitment will save them 30 to 40% of their costs as compared to an LC administration, an LC support scenario. Now those are significant numbers that will have an impact. But like I said, we are an open network. We are working with anybody, and therefore we are open to work with B2B networks. We are open to work with individual corporates. We are open to work with systems that they have developed, because they don't have to change what they have today. They can just use that and connect to the Marco Polo network.
Okay, so I think what you're saying is it's a very powerful, and I think maybe this is the answer to the question. It's the power of the network is not just through the technology, but through the number of participants that we have. So anybody who has their own network will be limited to that network, however big it is. Here, what you're saying is we have access to numerous networks through this sort of filter almost. Thank you for that. Time is getting on. Thank you for all the interesting questions. I'll move on now to Andre Kasterman, if we could bring up his slides, please, who's going to tell us what we've been doing, tell you what we've been doing in ITFA on the DNI and what the DNI is, the Digital Negotiable Instruments Initiative. So, Andre.
Yes, indeed. Thank you, Sean. And